Welcome everyone. We've got some great news for you if you love paying taxes and making less income. It is a bit more taxy because with the new year, we also have the BC's new anti-flip tax. And just so you know, it is different than the federal anti-flipping tax. So don't you worry, because in this video, we've got you covered. We will talk about what the tax means, what the numbers and implications are, and in what cases are you exempt from this tax. So stay tuned and let's dive right in. Here's the deal. As of January 1st, 2025, if you're selling your property in BC and you've owned it for less than 730 days, which is 2 years, you might owe the BC government a home flipping tax. Now, this tax targets short-term property sales to discourage flipping and stabilize the housing market. It's part of BC's ongoing effort to address affordability issues. That's what they say, not sure how much it works. But here's the specifics. The tax rate is 20% on the net profit from a sale if you've owned the property for less than 365 days. Between 366 and 730 days, so between the first and second year, the tax gradually decreases depending on when you sell it. And after 2 years, it's finally gone. Essentially, the longer you hold a property, the less you pay. If you're thinking, wait, isn't there already a federal property flipping tax in place? You're absolutely right. But this is a separate tax. 2 flipping taxes for the price of 1. Woohoo. But let's get through the specifics. So let's jump right into an example to see how the tax works. I'll run 2 scenarios here to make it easier to understand, and I'll also talk about exceptions, etc. towards the end of the video. So number 1, let's say you buy a property worth $500,000 and in 6 months, which is within the first 365 days, you sell it for 600, you have a profit of 100,000. Now you will be taxed 20% of that net profit, which is roughly $20,000 you'll owe towards your taxes. Now let's actually go to the scenario in which you hold it for longer than a year to see how it affects and changes with different time periods. So if you are holding a property for 500 days, and now let's go back, we're talking about the same property you bought for 500,000 and the profit is 100,000. Because you're buying it after 500 days, which is more than 365 days, the formula will be used as follows: 20% times 1 minus the amount of days held subtracted by 365 divided by 365. In this particular example, this comes up to 12.62%. So if you're selling a property in 500 days after you bought and you have a profit of 100,000, you'll be taxed $12,620. Again, just to reiterate, longer hold cuts your tax liability. Now, there are exemptions to the rule. Firstly, you have to know that after 2 years, you don't pay this at all. But if you do have to sell within the first 2 years, the following are the 4 exceptions. Number 1, life events. So illnesses, job relocation, etc., you may be able to get an exemption. Other scenarios, if you're a builder or a developer selling new construction. Another exception is family transfers. And number 4 is special property types, something like a farm, land, etc. So there are some applications for it to make more sense. But to be honest, will this tax really help in affordability or in supply? I don't know. Feels like they're burdening homeowners who are already burdened, and they're really stopping enterprise, which is not something they should do at this stage for our economy, for so many political things. But let me know what your take is, because if you are planning to flip a property in BC, you are stuck with this and you need to know the implications. The tax does affect everyone from seasoned investors to first-time home buyers. So please make sure you talk to a good accountant and get in detail. If you found this video helpful, please give it a thumbs up and share it with someone who's thinking about flipping, and make sure you subscribe so you don't miss future videos where we'll dive into more real estate strategies, passive income tips, and ways to grow your wealth. Thanks for watching. I'll see you in the next one. And don't forget to sign up for our amazing email list. Until then, happy investing.